Good morning and welcome to the XM.com weekly market update. Joining me again is Peter Maguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Our last wrap for the year.
Yes, it's been a great year. We're today, the 18th of December. It's gone quickly.
It certainly has, and plenty of activity, geopolitical, elections, interest rate cuts.
Yep.
Equity markets running hot.
Yes, globally.
Australia
included.
True. Maybe not to the same levels, but it has gone up.
Still had a high.
Yep, certainly did. So I think every year is very different, and there's always plenty going on to discuss.
Yes, 100%.
Now,
what a wonderful thing to discuss, the Australian peso.
Yeah, well, not ideal. So we've looked at this the last couple of weeks now hovering around just above 63 there, which is under a lot of pressure, not only from obviously a stronger US dollar, but a weak economy domestically and still high interest rates.
Yep. We've got to see whether that will materialise as far as a rate cut come April or May, or is it going to be pushed out further during our winter, and how we fare in Christmas sales in the sense of the health of the retail consumer.
Yeah, and I think interesting, I think Australia, they have to hold the election by May, I think it is next year, the federal election. So does that sort of come into play as
some
to the
political
timing?
Interference?
Potentially, because I think they would like a rate cut much earlier than May. So
yeah. Well, I know the general public would that are holding mortgage.
100%. China, once again, we've talked about this as well quite a bit recently. GDP is stable, but nowhere near as strong as what it has been in past years.
No.
Oil, though, has been probably one of the main stories of the year, really, is the weak demand out of China. The oil price has stayed quite low for most of the year, which in normal circumstances, you would have thought it was spiked on the back of all the drama going on around the world.
Absolutely. And as you've said, that just really demonstrates, I think, the economic situation, house pricing, and trying to re-stimulate their economy. China is in a woe of trouble. And how does that perform in 2025?
Yeah, and they've put in these stimulus packages just recently, but it's very much the market thinks it's just a sugar hit.
Yep.
Basically.
It is, yes, exactly.
Yeah, but the oil, you haven't got the demand out of China. The rest of the world economy is pretty good. Obviously, the US is more or less self-sufficient anyway. Yeah. But
and going to become far more so with President Trump adding 3 million barrels a day for 3 years.
Yeah. So you would sort of think, does the oil price come under more pressure potentially?
Yes, could quite easily do that. Yeah. Certainly if the geopolitical tensions are stripped out.
Definitely, but plenty going on there. Just quickly look at the equity or the US equity markets for the year. NASDAQ, top of the pops there, up 36% year to date, which is just outstanding. S&P 27, Dow 15. Dow, even though, not bad for the Dow.
No, it nearly hit 20 and then it's only tailed off this month.
Yes.
It's been a very solid move, and the Russell 2000 also performed incredibly well in November. It was up 8% for the month. And when you look at that November was a really, really strong month for equity growth. But yeah, it's been one-way traffic. How can you argue? 36% showtime.
Yeah. You look at the NASDAQ there, that was just in August. That was only up 10% for the year in August.
There you are.
So in, what's that,
the last 4.5 months have been extraordinary.
Yeah, it's gone up, 25%.
Yep.
Wow.
It was going up, many times you'd see it up 1.5% for the night, 1.5%. So over a week, it's really gaining, huge leaks.
Yeah, and there's been plenty of sort of buying opportunities in there as that market came away in sort of April, May, and once again in August, and it actually came off a bit in September as well.
Yes, it did.
It's certainly good for the traders.
Sure. Oh, they love it.
Speaking of US equities, the Magnificent Seven and their proportion, 34.6%.
Wow. I don't know whether, I can't say anything other than wow. It really is mind-blowing, and that's one for all of the viewers. Please study that, because that just tells a whole heap of story.
Yeah, probably not ideal.
Well, maybe not. But sectors work like that. I mean, energy has worked in years gone by and decades gone by.
Yes.
Certainly the IT industry and computers and internet, all of those times. So, just at the moment, this is just on fire. The last 10 years is just...
Yeah, and I think you go back historically and talk about periods of time where you went from the steam engine, and then
Industrial
Revolution. Then you had the sort of the tech revolution in the 2000s. There was a big clean out, obviously, with the dot-com
late
bubble.
90s. Yep.
But that clean out was fair because most companies didn't even have any revenue.
Didn't have revenue.
It was like an idea sort of thing. So, but now, even though the tech is very strong, is AI the next revolution, and hence
I'll tell you what,
strength of these stocks.
I can't argue with it. It's hard to sit here and say it doesn't exist. Have a look at that.
Yeah, and it's pretty extraordinary what the AI is, and we're probably only in the first innings.
Yes.
Of what that's going to provide. So, which is pretty mind blowing actually. So, Bitcoin, the other standout.
5th of November, 66 or 67 US, now 107. It's up the best part of 1,000 every day. It's only 40, it's 6 weeks. Yesterday was the election, 42 days. It's up $1,000 US a day on average since the election.
Yeah, it's pretty extraordinary.
Yeah, I'm speechless.
Yeah. Very volatile, but there's still plenty of support for it by the looks of it.
And that equates to the best part of, that percentage, 43,000 or 42,000 on 65,000, that's 70, approximately, in my mind, 70%.
Yeah.
Guys, have a look at the charts, study it. You can't walk away from it.
No. And because there's so much liquidity there now as well, from a trader's perspective. It's a market you probably want to participate in.
Yep. And, and you can't shy away from gold either.
No.
Let's not kid ourselves. It was 2,100 or 2,000. Now it's 2,700. It's been to 2,800. People are saying 3,000. You've only got to have, a couple of things happen from a geopolitical standpoint. What's going to happen with the Fed? Are they going to drop rates? That would normally stimulate gold.
Yes.
And if that happens, I know it's a blackout, but if they do drop at 25 basis points, I wouldn't be surprised for gold to take a leg up. That's not trading advice, by the way. That's just an observation.
Yeah. But the market it's pretty confident that 25 points will come through.
And you can't lie about the S&P. That hasn't sat on its hands either. What was that up? 28% or something?
Something like that.
Only 28%.
Yeah, I know. But the irony there, then you're in a market which is backed by assets, which have revenue and profit,
100%.
unlike Bitcoin. But obviously, the return on Bitcoin is, well, as you say, the chart tells the story. So crazy stuff.
And it is crazy. You say at the start, we look back in the year in the vision mirror, and there it is behind us, and that's what we're looking at. That's in front of us on the windscreen, and we just go, wow, what a year.
It was, it's pretty extraordinary actually. So now, not to end on a negative note, but the elephant.
It's a realistic note.
The elephant in the room at some point is world debt. Now, obviously, US has got 36 trillion of debt globally, 102 trillion, which is
a lot of money.
Hard to get your head around. So at some point in time, the country is going to have to address this. Now, that could still be quite a few years away.
Or is President Trump going to be the guy to say, right, let's just knock this out of the park?
Yeah, or just, obviously, you're not going to be able to repay it, but just get it under some sort of control where they can just stop it from growing. Because at some point in time...
Well, the interest on it.
How
how do you pay that?
Well, that's the issue as well. It just it's the compound, isn't it? In a bad sense.
Yes. And when you look at that, 36 trillion.
Yeah.
What's the interest rate they're paying?
Well, let's say it's the Treasury, which is what, 4%.
Okay, 4 threes are 12, 4 sixes are 24. It's 144 billion. No, it'd be, that's more than that. No, it's
large.
I'm just trying to think if it's a trillion. Well, 1% is 36 billion or 360 billion. So it's 1.4 trillion in interest.
Yeah, something like that. I don't know. The numbers are too big. But yeah, it's once again, a chart is a fantastic way of telling a story. Again, that's so for all the traders, just to have a look at that, where you sit internationally. There's viewers here, they might be in Spain, they might be in Mexico, Brazil, because it's a global audience. And wow, guys. Yeah. So
thanks for that, Andrew. That really paints the picture.
Yeah, of something that's going to need to be addressed at some point in the future. But anyway, that's a wrap.
It's a wrap.
Yeah.
Thank you for a great year.
No, thank you, Pete. It's been, as I said, plenty happening, plenty of excitement, but...
and maybe the best is yet to come.
Well, you know, there's always something around the corner.
Oh, well, you've got a new president.
Yep.
You can't walk away from that.
No.
He has been elected.
Yep.
And we're a month away really from an inauguration. And what does he do? Because you can't walk away from that he is quite unorthodox.
Yes.
Second term. And all guns are blazing.
Yeah, for sure. And as you say, he's got the mandate to do what he wishes.
Congress, Senate, he's got the power.
Now, if he comes out with some left field things, which is probably a strong,
he's a left field guy.
Strong possibility, that's probably enough to bring a bit of turmoil into the financial markets.
Yes.
The financial markets love certainty and they like it to be calm. So, yeah, it could be a pretty rocky road next year, not in a negative way, but no. I suspect there's going to be probably quite a bit of volatility in these markets next year to see what he does bring in,
yes,
and what the effects of those changes will be, good or bad.
Good or bad.
But time will tell, but we can, obviously it'll be plenty to discuss.
Yep, well, we wish everyone a wonderful Christmas, a great new year. We'll see, when are we back?
It'll be early January, maybe
early January.
Second week of January.
Perfect.
Thereabouts.
Good, well.
We'll crack on.
Yeah.
Excellent.
So to all our viewers, thank you again, and we wish you all the best.
Yep.
Take care and good health. Thank you, Andrew.
And Pete, have a good break as well.
Thank you. Oh, well, unfortunately I don't. The markets are open, as you know.
True.
And I haven't been asked to talk on TV for Christmas Day, but I have done that before. So let's just see if I get another invite.
Well, you never know.
You never know. It's just, I'm expecting some fireworks because you've got Japan this week, you've got the US, you've got Bank of England. So I just feel as though there could be increased volatility leading up to Christmas.
That's right.
For currency markets.
Yeah, as you say, there's plenty of data coming out later this week as well. So we'll keep an eye on that. But anyway, it's been great to chat, and we'll catch up on the new year.
Thank you, Andrew.
And that's the xm.com weekly market update.